Hello guys, welcome to another weekly breakdown video. Today I have come back with the weekly breakdown video of the third week of September, as you can see, which will start from 23rd of September 2024. So I'm gonna start the backtesting from that timing. So Monday, if I show you the news before I trade, I always show you the news. So Monday there is significant amount of news throughout the day. Tuesday New York, Wednesday no trade. So and Thursday and Friday there is New York news. And even if I show you the economic calendar, the same sort of thing is true in here, right? So going on the next week, my bias is clearly bullish according to how this previous weekly candle closed, and it is also reacting off of this demand zone right here, which is broken structure to the upside, supply demand. So obviously my bias going on to the next week is bullish on GBP USD and bearish on DXY. Clearly we can see this is not one of the best bias. As you can see, DXY was not clean. It is literally not bearish. It is looking like a bearish candle to me because of the rejection right here, because we understand market structure, price action, right? So in this case, literally on GBP USD it was bullish, so I was looking for trades on this week purely based on the GBP USD. So now that's the weekly analysis for us. The weekly bias is bullish, so anything that's aligning with the weekly bias, that will be considered as high probability. So on the daily time frame, the same sort of thing, the demand, the supply, the change of characters, there's no fair value gap. So going on Monday, the bias was aligning with the weekly bias being bullish. Like on Monday my bias was bullish and weekly bias is also bullish, so maybe looking for a trade will be ideal, but always compare your trades that you take on GU with DXY. Clearly on DXY you can see the market has closed as a doji, so Monday is not ideal to trade because GU bias is clear, it's aligning, but DXY is not aligning. That is when we go to EU, and if EU was aligning in this case, meaning if EU was aligning with a bullish candle, then I would have taken the trade on Monday. But in this case EU was also not aligning, so the best thing that we could have done here is not trade on Monday, and also not trading on Monday would have given me my bias for the rest of the week, meaning would have given me the bias for Tuesday. So what I did, I didn't took the trade on Monday. Simple. I didn't took the trade on Monday, and not taking the trade on Monday literally gave me my bias for the next day. And even if I didn't take the trade, let me quickly show you what happened on Monday. Monday, literally the Asian low got swept, previous structural liquidity right here got swept, literally huge amount of selling pressure here, and at our timing, which is London session, we got the beautiful trade again from this sort of demand zone right here on the H1, but I have not marked this zone, as you guys can see right here. This trade I have not marked because I have not taken it, and the move did happen, the demand zone did got respected, that was made on Thursday from here. So you just have to keep that in mind, right? This was a winning day, the idea was clear, the bias did got respected, so on and so forth. So now going on Tuesday, my bias is still bullish because of how this Monday candle closed, and obviously I'm looking for buys on Tuesday, and also I'm looking for sells on GBP on DXY. On DXY you can argue this supply zone. This, you may be arguing why you didn't mark this supply right here, because this supply, the market is still ranging. The market was not able to body close below here. That is the reason why I didn't. The market is literally ranging between this low and this high, higher low, higher high, and it is ranging between these zones. That is why I have not marked the supply. Simple as that. So going on Tuesday, my bias was clearly bearish on DXY and bullish on GBP USD, right? So that is when I go to the lower time frames like the H4 to see some buy side fair value gaps, because my bias is bullish, and there was none. As you can see, also the price is on its all-time high, as you can see, and there is no buy side fair value gaps. That is when I go to the H1 and look for some information. The lower the time frames we go, the bigger the picture we get, right? So that is why we go to the lower time frames. So going on, the previous week high was also swept, as you can see. We waited for the Asian range to close, because before the Asian range we don't do nothing usually, and we did got a trade on Monday, but this was not one of the cleanest trades. As you can see, if I go to the M15, the market literally went down, swept previous structural liquidity here from 245, which is ideal, and then literally mitigated our M15 demand. And also this demand zone was valid because of the previous day volume. Previous day literally huge buyers were there in the market. So on Tuesday what made sense was a move from the closest zone, and also this M15 demand zone here was the closest, and after the Asian range, so huge amount of liquidity got swept, Asian low liquidity got swept, previous structural liquidity got swept, M15 demand zone got mitigated. It was our timing, which is 12, which is London, pre-London, and we did, if we did took the trade here, it would have been a winner. As you can see right here and here, we could have easily targeted a 1:3, and Tuesday was a winning day for us, but I didn't took the trade, and I've also not journaled this trade. So simple as that. Now going on Wednesday, without wasting any time, my bias is again bullish because of how this candle closed. The candles are literally rebalancing the price to the T, showing that huge buyers are there, even though there is no gaps, meaning there is no huge aggressive buying, but the markets are well balanced as of now. So going on DXY, my bias should be bearish, which it was. So going on Wednesday, clearly my bias was bearish. On Tuesday, my bias was not one of the cleanest because of the Monday candle, but now on Wednesday, my bias is clearly bearish on GXY and clearly bullish on GBP USD. And also on Wednesday, there is no news. Monday, there was PMI news whole day, so it was tricky, also tricky. Tuesday, there was CB consumer confidence, which we don't care. Tuesday was a winner. So now let's see what Wednesday has to bring. So going to the 4 hourly to look for the same sort of things like fair value gaps, buy side fair value gaps, sell side fair value gaps, some sort of demand zone. So there was a H4 demand zone right around here, which I didn't mark. Why, I don't know, but let's see what happens as of now. So obviously waited for the Asian range to close, and after the Asian range closed, the most ideal case scenario would be this H1 demand right here, a buy from this H1 demand. But I took a mechanical model right here from the M15 demand zone because of how the previous day volume was there. The previous day was huge bullish again, like it was on Monday. Monday it did play out, the closest demand zone did play out, but on Tuesday the closest demand zone got played out, but on Wednesday it didn't play out. The same strategy, the same thing, it might repeat in the markets, but the outcomes may be different because every trade is unique. In every trade the participants are unique, right? So the outcome can be unique. That's why it's a game of probabilities. Trading is a game of probabilities. You have to, as a trader, all you can do is manage risk, take educational guesses, and put the odds in your favor, as much as odds in your favor. So this was a mechanical trade. As you can see, I've also journaled this trade if you wanna get more information in this trade. And yeah, this was a loss. As you can see here, we can clearly see the MAC model didn't work as there was a clear demand zone right here to trade from. So maybe whenever there is a clear demand zone, that is when the MAC model don't work. And going on Monday, the daily bias was not clear, and it was also not aligning with DXY, and that is why we didn't trade on Monday. On Monday, the previous day low was used as the previous structural liquidity. Okay, so this was the previous day low. Monday took the previous day low as previous structural liquidity and gave us the move from this sort of demand zone, as I've told you, right? So this was Wednesday. Wednesday was a losing trade for us. It was a losing day, and this loss I would have taken any day, meaning in the live markets, maybe I would have not executed this trade at the first place because it was not one of the cleanest, the MAC model, and the demand zone did got respected. The demand zone trade on Wednesday did got played, and it was a winner. But according to how this Wednesday candle closed, now, obviously, if you are a pro trend trader, everyone would have looked for buys after this, how this Tuesday candle closed. But it was very uncertain that Wednesday literally started to go to the downside now. So now going on Thursday, my bias has clearly changed. My daily bias is now bearish on Thursday, and which would be bullish on DXY. But also you have to use your intuition and use your own brain, right? As you can see, a huge bearish candle and then a huge bullish candle again. So this is clearly showing me indecision in the market. This, according to my experience in the market, what I've seen, this is indecision for me. Literally one day is bearish, one day it's bullish again. Clearly it's indecision in the market. The market is not in decision right now, and that is when I don't like to trade. So on Thursday, even though there was indecision, but GBP USD was clearly bearish, so I considered it. And also on Thursday there was New York news, so I could still trade London session. So I was looking for some sort of change of characters on the 4 hourly, which we did got, I believe. Yes, we did got our change of character right around here. A beautiful H4 change of character. This H4 now is the supply zone that we will be anticipating to trade from, but not like we need that supply zone, no. So going on Thursday, I waited for the Asian range to close, and if I was looking for something on Thursday, I would look for some sort of fair value gaps right here like that. And even on Thursday, it was a losing day, losing trade, because Obviously this trade I would have not taken on the live markets. Why? Because it is a fair value gap trade in the first place, and this was the MAC model. As you can see, a beautiful MAC model, accumulation, manipulation to the upside and distribution to the downside. But also this was a losing day, and losses are part of the game. We lost this trade, doesn't matter, on to the next one. It was also a fair value gap trade, so it was not high probability. So I have journaled this according to, whenever there is a fair value gap trade, we don't take it because it's not high probability. And also you have to use your own brain and see, okay, the market is doing this, this and this, it is changing bias like left, right and center. Is it high probability to trade? And you have to come to a decision from your sixth sense, right? So now again, the market was bullish, Wednesday turned bearish, and now again it's bullish, right? So this is when I call the market to be an indecision. One day it's bearish, one day it's bullish. And also on DXY, literally this candle, this is a Harami pattern right here, which is a reversal pattern. As we know, we have studied candlestick pattern. Wednesday was bullish, Thursday is now bearish, so obviously we'll look for sells on DXY, and GBP USD will look for buys. Maybe in the live markets I would have not traded this condition, maybe, but let's see. We have to learn every single condition so that in the live markets, whenever it shows up, I should be knowing what I should do in those conditions, right? So clearly this H4 demand zone right here is, for now, is getting respected, but let's see how long. So this H4 supply zone that I've marked literally didn't got respected, and also there was a change of character on the H4. Okay, there wasn't, so that's why I have not marked it. But if I'm looking for something, it will be buys on Friday because of how that Thursday candle closed. Simple. So you are seeing, right, how am I adapting to the markets? If I adapt to the market conditions like I'm doing here, obviously bro, one day I'm gonna catch a beautiful trade, and that is what we need in the markets to make all the losses back, right? So the Asian range closed perfect. It was literally perfect, higher low, higher high. This was our session, this was our trade idea, and according to how the Asian range closed, I was waiting for this demand zone to get mitigated and then look for a buy. It was a clear demand zone on the H1 time frame, on the 1 hourly time frame, as you can see. So now waiting for our timing to trade. Literally this was the demand zone that I was looking to trade from, and obviously an Asian low setup will be beautiful. So Asian low got swept. This was exactly our timing, which is now I'm looking for MAC model, and our timing started from here 11:30, but maybe I would take a initial entry here and I would lose this trade, right? I would lose the first entry, but I would enter again. Why? I would enter again because this trade is looking so clean. The higher time frame, point of interest mitigation, inducement, M15 rejection, lower time frame entry signal, DXY correlation, everything I see in a trade, it was present here. It was a class setup on Friday, so I would have taken this trade any day after that loss, and I would make all the losses that I took on the week. As you can see, all the losses, 2 losses that I took, I would make back. 3 losses that I took, I would literally make back in this trade. So that's the beauty of trading, that's the beauty of risk management and trade management, right? So this trade was a beautiful trade. There was also news that was on CB. Okay, so there was core PCE price index, which was in our favor. As you can see, I didn't execute this trade, but I for a fact guaranteed that I would have taken this trade, and this would have been a winner. And yeah, this was the weekly breakdown. Hope you guys learned from something. On Friday, the move did happen exactly how we anticipated. It was a class setup, but I didn't take the trade. Simple as that, because I was a bit in a hurry, and yeah, also so on and so forth. It was a very tricky day to trade from on Thursday, and there was no clear zones to trade. There was fair value gap, so it was a low probability. Here we can see the MAC model didn't work. So this is also the weekly breakdown, and if I show you how the weekly candle closed, because it's a weekly breakdown. Now going on next week, my bias is not clear. As you can see, it's a doji, so trading next week is gonna be very tricky. Wait, please be tuned for the next video. I will explain how, why and where, everything in the next video about the next trades. Okay, so this is the weekly breakdown video. Hope you guys learned something from this trade, and yeah, see you on the next video.